The good news is inflation heading back towards target and no recession. When we started this interest rate hiking cycle, I think this is quite a good outcome. China has this enormous role to play in the region and the world from an economic perspective, but as a large economy also, exports can't be the source of growth forever. At some point there needs to be a transition to domestic demand, and I think that's already started to occur.
Well, thank you so much for being here today. And to start with, I want to talk about the Fed. Is the Fed's temporary rate hike pause a good reason to be optimistic? And do you think it's possible that we will see a policy pivot sometime in 2024?
Yeah, I think we should be optimistic, maybe firstly because a recession doesn't look very likely. You know, the market's gone through various phases of recession on, recession off, recession on, and I don't think there's ever been a big chance of recession. So it's good news that people are recognising that. Also good news, the Fed's trying very hard to get inflation back to target and not have a recession, which is the phase the Fed is in at the moment. And I do think we'll get a policy pivot next year. Fed funds is at 5.5, the inflation target is 2. As inflation comes down, I think the Fed will have some room to bring its interest rate down as well, not until the second half of next year.
So do you think the inflation is going to the right direction as the Fed hopes?
I hope so, but there is some chance the Fed may have to sneak interest rates up a little bit more or keep them higher for even longer than the market is currently expecting. But the good news is inflation heading back towards target and no recession. When we started this interest rate hiking cycle, I think this is quite a good outcome.
How do geopolitical events, such as the recent conflicts and international tensions, impact the global economic outlook and stability?
Yeah, geopolitics has changed, obviously, in the last 5 or 6 years. The world is not quite the same as it used to be. We shouldn't overemphasize how much has changed because, of course, most global trade still happens without significant restriction. Trade agreements are still being reached between countries. Regional trade organisations are still accepting new members. Maybe we're in a more sceptical phase of globalisation. Globalisation brought enormous prosperity to the world, increased global trade, helped keep inflation low. If we're in a more sceptical phase of globalisation, we should expect maybe a little bit slower economic growth, a bit less trade, a bit higher inflation.
So like the future of the global trade, as you just said, is going to we kind of see some shifting back from the globalization. So do you see the future will be more based on the regional focus?
I mean, perhaps, but new words have arisen. Onshoring, reshoring, friendshoring. I think there is just a different perspective around trade and a recognition that it doesn't just bring economic benefits, but potentially in some situations opens you to supply chain vulnerability or supply vulnerability. I think global trade it's occurring in a different environment, and I think there will be more consideration about having trading relationships that are closer.
We are actually being really optimistic about the soft landing because the outcome is obviously better than what we expect from the starting of the year. What's the overall outlook for the?
I think the recession view came from two ideas, both of which I disagree with. One is the idea that most of the inflation had come from supply side problems. And the second idea is that balance sheets in economies like the US were quite vulnerable, that consumers are quite vulnerable, when actually consumer balance sheets on average are quite strong, not just in the US, but in Australia, New Zealand, the UK, many other advanced economies. And most of the increase in inflation, I think, has come from demand that is too strong. There are some supply side factors. The pressure on the climate transition and the investment and change that's required from that. Demographic ageing is a supply side factor. The readjustment in global trade is a supply side factor. And they're different from the last 1 or 2 decades. But most of this inflation challenge has been a demand challenge, and interest rates have risen. And so demand, I think, is coming back to some level which is more sustainable.
According to the OECD, Australia's real GDP is projected to grow by 1.8% in 2023 and 1.4% in 2024. So what's your insights into Australia's economic trends and the bilateral trade between Australia and China?
The Australian economy has been slowing under the influence of 400 basis points of interest rate hikes. That's been uncomfortable for some parts of the economy. The good news is the slowdown in demand is occurring with a still very healthy and stable financial system, and it's bringing inflation back towards target. Maybe a bit like the US, inflation has come from above 7 to about 4%. The inflation target is 2 to 3%, so there's still some way to go. I'm hopeful that current interest rates are high enough for inflation to keep coming back towards the target, but a little bit like the situation in the US, if the Reserve Bank has to do something in the next 3 or 6 months, it will be to increase rates rather than decrease rates. I think most would agree the economy's handled higher interest rates quite well, and even though growth is slower, the economy's still looking quite stable.
What's your thoughts on inflation trends in Australia? But how might this influence the monetary policy and investment decisions, especially?
The Reserve Bank is very focused on inflation dynamics because their primary objective is a 2 to 3% inflation target. We're down at 4, a little bit further to go to 2 to 3, and I'm hopeful over the next 18 months we'll get back there. Investment, there's 2 sides to the story, though. One side is higher interest rates, which I think a lot of people are focusing on being a challenge for investment, and that's true. But the economy is still quite solid, so there's still demand for businesses to add capacity, still demand for governments to add infrastructure, still demand for the climate transition to electrify, move forwards in the climate space. And what's been holding some of these back actually is not just interest rates, but availability of inputs, materials, transport, labour. And as demand in the economy has slowed, some of those things have become a bit more accessible. So I think actually, even with higher interest rates, investment in the economy will stay quite solid.
Thank you. So moving next to China's economy. So what's your view of the outlook for the Chinese economy? And considering the various challenges we are facing right now, are the future dynamics of the Chinese economy actually changing?
I think the future dynamics are changing, and the last couple of years, I think you've already started to see that. Maybe where I start on China is just to remind people it's an $18 trillion economy, a little bit smaller than the US at number 1, but a lot bigger than Japan at more than 3 times larger than Japan at number 3. So China has this enormous role to play in the region and the world from an economic perspective. But as a large economy also, exports can't be the source of growth forever. At some point, there needs to be a transition to domestic demand. And I think that's already started to occur. And that means more of what drives China will be domestically driven rather than being influenced by external events. China is still maybe towards the top of the middle income range on the World Bank's scale, but still a middle income economy. So plenty of runway for development yet.
So, while China is undergoing structural transformation of its economy with a focus on high-quality development and technological innovation, so what's your perspective on this transformation?
The transformation, I think of China as having the last 20 years as maybe the first stage of modern development. In fact, we're talking here in Shanghai. My first trip to Shanghai was almost exactly 20 years ago. So I've seen the way this transition has happened as a very export focused economy, a very investment-focused economy to deliver those exports. And I think we're in another phase now where that approach is giving way to one where domestic consumption is more of a source of growth. So investment will consume less resources, but the Chinese consumer will become more important, and potentially the most important consumption trend in the global economy is what's going to be happening right here in China.
China's economy, what will be the major driving force, and how would it impact the region around China?
Every economy, when they go through a shift in the primary driver of growth, finds that that can be a complicated period. For many economies, for instance, shifting from a fossil fuel driven world to a more green energy world is going to be quite a difficult transition. China's transition from investment and exports towards domestic consumption, and we should expect to have some periods where maybe it doesn't feel so comfortable, but ultimately what will come out of that is an economy which determines more of its own destiny. It's dependent more on domestic consumers, and also China will probably start importing more from overseas rather than a lot of the trade being to import with the purpose of exporting. It will be to import for domestic consumption. China, on any projection, is still by far and away the largest economy in the region, about half of Asian GDP, about 2/3 of Asian GDP. Once you exclude Japan, China has taken about 53% of regional foreign direct investment flows in the last 20 years. China has taken about 75% of regional portfolio inflows in the last 5 years. I think China's economic status in the region is assured. This transition will just mean the growth drivers, I think, are different. And growth is probably slower than it used to be. China is at the upper end of the middle income phase. No economy can grow quickly forever, but China can become wealthy by growing more slowly, but over a longer period of time.
Well, just to wrap it up with all what we talked about today, and what's your overall outlook for the global economy as we move into the next year and the year beyond?
I think the most important issue for the global economy is avoiding a global recession. I think it would be very unfortunate if after having the biggest inflation problem in a few decades, central banks then over-tightened and created a recession on the other side. That would be, in a way, compounding one error with the opposite error. So I'm optimistic but also hopeful and expectant that we're not going to have a recession, and that's probably the first mistake to avoid. And the global economy is still growing, which I think is our most important objective. I'm quite optimistic from a growth perspective, but the challenges are also there as well.
Yeah. Well, do you think everything actually turns out better than what everyone expected, in the beginning of the year?
I've been an economist for quite a long time. People typically like to talk about what's wrong, so let's spend some time talking about what's right. Global demand is still growing. Inflation is coming back to target in most economies, and that's occurring in a way that's better than most people thought. It seems likely we'll avoid global recession, and the global financial system is in very stable and very strong shape. There are some domestic examples of maybe some financial instability. We had some challenges in the US banking system earlier this year, but I think there's a lot to be optimistic about.
Well, thank you so much. That's all the questions I have.
Thank you very much.
Thank you so much for your time. It's really important.
Thank you.
Thank you so much.